Down payment assistance programs and how to qualify. That's what we're going to discuss here. I'm going to go over programs and what it's going to take to get those programs for you so that you can buy a house when you're ready. So down payment assistance programs are so popular right now, so popular. And even more than that, they're easier than you know. They're easier to qualify than you know. It only takes a couple things to qualify for a down payment assistance program, and I'm going to cover that here, okay? Wait until the end because every single piece of this is very important if you're really thinking about buying a house and you really want to get yourself a down payment assistance program. Now, down payment assistance programs are geared around two things. The first thing and the most important thing, the one that knocks most people out from getting one of these programs, is the credit score, your credit score. So the minimum credit score needed is 640. Now, when we pull credit, there's three different bureaus, okay? You have your high, your mid, and your low. We get rid of the low, we get rid of the high, so we go off your middle score. That middle score needs to be 640 or better, okay? So as long as you hit that range, you have an opportunity to get a down payment assistance program. And what that means is that the program is going to cover the down payment for you. There are many different types of down payment assistance programs. The most popular is a second loan, okay? It's a silent second loan, which means you're borrowing money to buy the house. Let's say that the purchase price is $400,000, okay? You're getting 3% of that amount. So they're giving you $12,000. So now they're giving you $12,000 for the down payment, and they're going to give you $388,000 to buy the rest of the house. Put that together, that's $400,000. Now the $12,000 that you're borrowing, if it's a silent second, you're not making a mortgage payment on that. In some cases, there's a small interest rate attached to it, so it slowly grows, okay? You do have to pay it back eventually, but most of the programs are going to be paid by a triggering event. So you're either going to pay it back when you refinance, which you may do because you want a cheaper interest rate later on down the road, or if you sell the house. So it's something you don't have to deal with today. In most cases, it gets paid back through the refinance somewhere down the road when there's a better rate environment, or maybe you've just built some equity, want to take some money out, build a pool, you'll pay it back then. And it's only $12,000. So imagine 5 years goes by, okay? You build 40, 50, maybe $100,000 in equity, and you want to take a little bit of that to pay a pool. You pay your 12 grand during that time. Easy, said and done. Or maybe you're relocating. Maybe you need a bigger house. When you sell the house, it gets paid back. Easy, okay? That's a silent second. Another version of the down payment assistance program is a grant, okay? A grant. And a grant means that it's free money. And what will happen is that you have to live in the house for a certain amount of time, and then it's forgiven, paid back. The third is a down payment assistance program where you're actively paying it back, okay? If you're actively paying it back, that means over a certain period of time, it goes to zero. You don't have to worry about it. You just worry about the other portion of your loan. Keep making your mortgage payment. 30 years, it's paid off unless you refinance or sell. So that's how down payment assistance work. But there's these speed bumps that people run into where they think, I can't get a down payment assistance program because I don't have fantastic credit. You don't need fantastic credit. That's why I tell you, you need a minimum of a 640 credit score. The second thing you need, the second most important thing you need in order to get qualified is a 2-year work history. A 2-year work history. So you could start working at 18, be 20 years old, that's 2 years of work, have a 640 or better credit score, and purchase your first home with a zero down payment using one of these programs. It's that easy. There's nothing complicated about it, guys. Where a lot of the challenges kick in is maybe you went out and overextended yourself on a car payment. Maybe you've mounted credit card debt. You know, that's where the challenges come from. As far as getting qualified for one of those programs, 640 credit score, 2-year work history, and that is it. Now, I'll go into a little bit more detail about those 3 different options that I shared with you, okay? Because all of them have their pros and their cons, okay? So when it comes to the 640 program and you have you want to get the second loan program, that does throttle back your buying power a little bit. Okay, let's say that you qualify for $400,000, you're paying your own down payment, but you have to use one of these programs and you're getting the silent second, so you have to throttle back the buying power a little bit, and maybe now you qualify for 350, 375 versus 400,000. And if that's okay with you, you're off to the races. For the other program where you're getting a grant, similar situation, but you might have a slightly higher interest rate, okay? So know this, there's no free money. They all have some kind of gotcha moments with these programs. And it still works for most people, but there are these little gotcha moments, okay? Now, the third one where you're paying it back is that you're paying it back. That's the gotcha moment. Has to fit in your total debt to income ratios with your current loan, your existing debts, and that portion that you're paying back. But in this case, you get to get the maximum amount of buying power. So in that case, as long as it fits in the ratio, you can still buy that $400,000 house. And this isn't limited to this amount that I'm talking about. You could be buying a $200,000 house, $400,000 house, $800,000 house. It's all about just qualifying. There are all these little other things that are involved, like maybe there's income limits, maybe there's not, maybe you have to throttle back, maybe you don't. Maybe you have to pay it back, maybe you don't. Don't worry about all those particulars. There's only two things I want you to be concerned with. Do you have a 2-year work history? And do you have a 640 or better credit score? Because if you can accomplish those two things, you have opened the gates to buying a house using a down payment assistance program. And that's how you qualify. So down payment assistance, and how do you qualify? That's it. 2-year work history, 640 or better credit score, and you're off to the races. Now, it's a loan officer's job to do our due diligence, okay? I always recommend, you'll always hear me say, just get pre-qualified, because it doesn't cost you anything and it's not going to impact you negatively. Just get pre-qualified, because if you don't qualify for one of these programs and you absolutely need to get one of these programs, we'll figure out what your challenge is and we'll teach you how to solve it. You don't have to do your own due diligence. You don't have to look online, try to pull all the guidelines, read this program, read this program, read this program, read this program. There's so much out there. Most of them do the same thing. It's one of those 3 types of loans: second loan, grant, or pay it back immediately. Okay, pay it back in payments. Start making the payments immediately is what I mean. It's mainly one of those 3 things. And they're all about the same, but there's so many out there that you can spend a lifetime trying to figure it all out, and all you're doing is going in circles. So trust your loan officer when you're going through this process. If you need to reach out to me, here it is. But it's that simple, guys. And here's the good news. We're licensed in all 50 states. Our bank is licensed in all 50 states. So you, regardless of where you're at, we can help you. So give us a buzz. Now, that being said, when it comes to down payment assistance, it is one of the number one things that's holding people back when buying a house. It's the down payment, saving the money. It's tough. I mean, if you got a family already, you have kids, they're expensive. If it's just you, it's hard to save money if you have only one income. Even if you have 2 incomes, it's hard to save money. So take advantage of these programs, because like I said, whether you have to pay it back now, pay it later, you get a grant, you start paying it back today, this will help you get into a home today. And that's important, because once you own that house, there's so many benefits other than owning your own home, other than telling people that you own a home, because there's a lot of pride in that. There's so many more benefits. There's tax breaks that you get. And I'm not a CPA, and I don't profess to be one, but I do know that for me, I save a lot of money in my taxes because that interest is tax deductible. The other thing is your equity gain. If you're paying rent already, the owner of that place that you live in is making the money in the value when it's going up. Now, they may not be putting it in their pocket immediately, but if you own your house, you bought it for $400,000, now it's worth $500,000. You sell that house, that $100,000 could be put into a new home. Okay, maybe you're upgrading, maybe your family's growing, or maybe you just decide you don't want to be a homeowner anymore. You made your mortgage payments on time, decided to sell it, and you cashed out. A lot of benefits from it, guys. So home ownership, such a big deal, but don't let the money on the upfront down payment stop you from buying a house, because down payment assistance we can do across the country, and it's going to help you. It's going to close that gap. It's going to get you moving forward, and it's going to solve that problem. So if down payment is the problem are the only thing holding you back from buying a house, give us a call. And like I said, you don't need perfect credit. A 640 or better is going to get you started down the right path to your work history. Just, we'll have the conversation about that, how we solve if you have a 2-year work history. And that 2-year work history doesn't have to be seamless. Let's say you worked 1 year at Amazon, took 6 months off, and now you worked the second year at Target. Well, we just take the first year, the second year, put them together. Or it could be 3 months here, 9 months there, a year and a half here. Doesn't matter. We'll put it together. That'll equal your 2-year work history. And here's a hack for you college students. Let's say you went to school and you got a degree, a bachelor's degree in engineering, and now you're an engineer at, Tesla, okay? And you just started and you've only been there a month. Let's say you only received your first paycheck. I can use that college history as work history and problem solved. You got your first real job, making decent money. You collected your first paycheck. You may not have a 2-year work history, but because you have a 4-year degree, that counts as a 2-year work history. Boom, you're out the gate buying a house. So I hope this helps. Like I said, reach out to us if you're interested in these programs. We'll help you. We'll walk you down it. We'll let you know if you qualify or not. If you do qualify, you're going home shopping. If you don't qualify, we'll help you solve the problems. I hope this helps. Have yourself a great day. Take care.